26 years of CNBC TV18.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Shruti Mishra. These are the top headlines that we're tracking for you from the startup world. Ace Vector, the parent company of e-commerce marketplace Snapdeal, has filed updated DRHP with the SEBI to raise funds via IPO. The IPO is a combination of fresh issuance of shares worth 300 crore rupees and an offer for sale of 6.38 crore equity shares by existing shareholders.
Skincare startup Conscious Chemist has secured 15 crore rupees in a bridge funding round led by Atomic Capital. The D2C brand plans to use the new capital to scale its inventory and increase investment in R&D. It is also preparing to enter scalp and hair care segments.
Frex, a peer-to-peer payments platform, has raised 9.5 crore rupees in pre-seed funding round led by Zero Pearl VC and White Venture Capital. The fresh capital will be used to expand Frex's on- and off-ramp infrastructure across North America and India, strengthen the compliance and regulatory stack across key corridors.
Orthopedic recovery product startup Lumov has secured $1.2 million in a seed funding round led by Incubate Fund Asia. The startup plans to use the capital to expand operations, build stronger partnerships with surgeons, and speed up the development of new products.
Starlink will offer satellite internet services in India at a cost of 8,600 rupees per month and a one-time hardware cost of 34,000 rupees. The monthly subscription cost is nearly 3 times higher than Bangladesh.
Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. From organic beauty to a new age business powerhouse, Organic Harvest founder Rahul Agarwal is back with his next big bet, Rasa Group, a diversified conglomerate spanning 6 sectors: sustainable real estate, modern Ayurveda, adventure tourism, curated luxury cars, legacy Indian cuisine, and a multi-brand premium laundry ecosystem. Rasa is targeting a pan-India footprint over the next 3 to 5 years and is already eyeing a group or sub-brand public listing within 2 to 3 years. To tell us what's the strategy behind this bold conglomerate play, joining me now is Rahul Agarwal, the founder of Rasa Group. Rahul, welcome to Startup Street. From building Organic Harvest to now launching a diversified conglomerate, Rahul, what gap did you see that needed a conglomerate-style approach, and what philosophy ties 6 very different verticals together? What's the common thread?
Yeah, so the idea is to organize an unorganized market in India, and we believe that Indian economy is at a cusp where a lot of unorganized business will have to organize themselves, especially the brands which have done the legacy kind of format. So across all the 6 verticals, that's a common thread. We are trying to organize an unorganized market in India.
All right, let's take Avni Infratech first. Sustainable real estate is a crowded promise. What's the differentiated play, Rahul, across Delhi, NCR and Goa?
So if you see the real estate as an industry, it has always been a little opaque. The customers are not shared all the information right from the time they book their inventory till the time it is delivered to them. So what we are trying to do here is to be absolutely transparent with the customers with the help of tech and digital. So just to give you an example, all the customer of ours gets an app wherein they can easily track the progress of the project. So it's just one of the examples that we do the tech intervention in the industry, which is highly non-tech driven. So yeah, that's the idea.
All right, let me move on to the next one. Sarvagun combines Ayurveda with telemedicine and evidence-based care. Rahul, what's the business model and who's the core customer?
So business model is simple. What philosophy that we are following here in Sarvagun is that what Germans did with homeopathy, we Indians can do better than that with Ayurveda. And the business model is telemedicine as well as this the clinic based. But again, with the help of tech, digital, and the other new age way of reaching out to the consumers. The target audience is anywhere between 35 to 65 age group, somewhere, working population.
Okay. You know, Adventix again is targeting high-thrill adventure experiences, hot air ballooning, paramotoring, ATV trails. Is India ready, Rahul, for large-scale adventure tourism? What's the safety and regulatory framework that you're building around this?
Absolutely, we are ready. If you see in hot air balloon, there are most of the tourists that Cappadocia in Turkey, they visit, it's majority of them are Indians. So the thought was, why not bring the same experience or maybe better to India with the world-class facilities and regulatory approvals. So that's what we are doing. In terms of the safety, we have the best-in-class people working on ground. So we have our pilot who does this hot air balloon. He's the gold medal with the Indian Army. So that's a kind of safety.
Sure. Let me go to Friday night cars. It is an interesting bet, curated luxury auto for India. How big is this niche and what is your entry strategy, Rahul?
So our idea was to import the American cars which are not manufactured in right-hand drive by the OEMs. So what we do is we procure the new vehicles from the US, convert them from left-hand drive to right-hand drive in Australia, Sri Lanka, and Middle East, and then import here in India and sell to HNIs. So that's a clear niche that we have identified. So these are the cars which you will not typically find on Indian roads because these are not manufactured in right-hand drive version of this. So that's the thing we are targeting.
You know, while G Bharke is bringing legacy food brands under one roof, you know, on the other hand, you've got next-gen dry cleaners already operating multiple sub-brands. If you could quickly tell us what's the scale and revenue ambition here and why go multi-brand in laundry care?
So the idea is to reach out to multiple consumer segment, multiple needs for the consumers. So right from the masses till the classes, everything is served under one umbrella. And with G Bharke, we are bringing all the legacy brands under one roof with an offline offering there.
Okay, you're targeting pan-India presence in 3 to 5 years. What does the expansion blueprint look like, Rahul? You know, consumer first, asset heavy or franchisee led. And also you've got, you know, you've set a 2 to 3 year timeline for a potential listing, you know, group or sub-brand. What are the metrics you need to hit before going public?
So we will always remain a consumer first brand. Anything that we do, right from the consumer, the communication of the brand ethos till the time we sell to the consumer, everything is direct to consumer. In terms of the matrix, we are very conscious about profitability. We don't, I mean, the cash conversion cycle has to be negative. That's a philosophy that we are following. And anywhere between 300 to 500 crores is the top line that we are targeting before we actually hit the public market.
On that note, it's time for me to wrap up our conversation. Rahul, many thanks for joining us on Startup Street and wish you the very best with all your growth plans.
Thanks for having me here. Thank you.
And moving on the hot seat today, Yoodli, the AI startup known for its realistic role-play simulations, is stepping into a new phase of growth. The Seattle-based company has raised a massive $40 million in a Series B round, led by Westbridge Capital, taking its total funding to nearly $60 million, all within months of its previous round. Yoodli is now positioning itself as a leader in experiential learning, giving professionals a place to rehearse high-stakes conversations and get instant personalized feedback. Joining me now to discuss this further is Varun Puri, the co-founder and CEO of Yoodli. Varun, thank you so much for taking time out and being here with us on Startup Street. Like I said, you're an AI role-play and experiential learning tool maker, right? Can you tell us what it is you have on offer and give us some use cases? What are you trying to sort of solve for?
Yeah, first off, it's such an honor to be here. Thank you for having me. The thesis behind Yoodli is simple. Too many smart people in the world miss out on opportunities because they don't back themselves while speaking. Think about any of us the night before a speech, an interview, a manager conversation, a difficult conversation, as we practice out loud in front of a mirror, a camera, a stopwatch. This is a problem that 2 out of 3 people face. So the idea behind Yoodli is how do we build an AI-powered communication coach that provides a private, real-time, judgment-free experience for folks to practice, go back and forth with an audience persona, and then get instant feedback to improve.
And, you know, you've raised this $40 million, right? Congratulations on that. What does this milestone sort of mean for Yoodli's evolution from, you know, a fast-growing startup to a trusted enterprise partner? If you could take us through how you plan to use these funds.
Yeah, it's humbling and exciting. We raised our Series A, which was a little over 13 million a few months ago. the Series B helps us make this dream a reality. We believe that Yoodli can help every enterprise out there, be this helping folks with sales enablement, partner certification, training managers, and helping consumers across the world as well. For instance, I use Yoodli before practicing for this interview. The fundraise allows us to double down into our engineering, to hire more, and to scale to more geographies.
Absolutely. And, like you said, a lot of enterprises are already trusting you. You've got the likes of Google, Snowflake, and Databricks already who are your clients, right? So how are enterprise customers using the platform today? You gave us one example about how you used it before you came for this interview. So how are your customers sort of using it, and what are the kind of results they're seeing? If you could take us how you plan through the plan on growing your client base as well.
Yeah, so the core problem within an enterprise today is learning is scattered and it takes far too long. For instance, if I'm an organization like Google and I need to train 15,000 reps on my new sales play, I would get folks to watch a pre-recorded video, maybe do a quiz, maybe organize hundreds of seminars, and then hope that whatever they've learned sticks in practice. Yoodli provides an ecosystem where folks can practice, actually get a batting cage-like environment, and make sure they're ready for prime time. So the kinds of use cases where we see most success with are helping sales teams reduce ramp, helping close win rates, helping managers and partners get certified in the company's methodology, right? Every organization has a different way of speaking. Google's might be different from RingCentral's, might be different from Korn Ferry's or Sandler Sales. Yoodli provides this instant rollout of training and ensures your field sellers and your customer-facing teams are speaking in the right company voice the way you'd want them to.
And, could you take me through the kind of revenues that you're currently clocking? Where are you at? And where do you hope to end this year? I mean, we're almost at a close, so you can give us a 6-month to 1-year target. Also, what's the revenue mix like, right? Which geographies are seeing the most demand? And how important of a market is India for you?
Yep, all great questions. So the revenue mix is between consumer and enterprise. On the consumer platform, anyone can go and sign up to Yoodli, use the tool, practice as a freemium model. If they like the tool, they can sign up. Most of our revenue comes from the enterprise side. It has been an exciting year. We've grown revenue by over 900%. We are poised to have the biggest quarter in company history. Right now, a lot of our revenue comes from North America and Europe, but we are seeing massive, massive demand from APAC, especially from folks in India, from speakers in Korean, Japanese, etc. And with this raise, we're excited to scale to new markets.
All right. And what would these new markets be for you to scale into?
It's a combination of Southeast Asia and more ecosystems within India.
All right. Communication is also becoming a priority skill for teams worldwide, right? That's the main thing here. What are the biggest demand drivers you're seeing in the enterprise learning and GTM enablement space?
Yeah, a couple of things. One, it feels like the whole world is having this Gen AI awakening. Everyone wants to get Gen AI as part of their stack. As a result of which, as companies are shipping product more quickly, it's becoming even more essential to train your teams all the more quickly, which is helping enable Yoodli. More than that, as AI gets ubiquitous, there are lots of companies that are building AI to replace human jobs. Something we don't agree with. Our ethos is let's help humans be the best versions of themselves in the conversations that matter most. But as AI extends across organizations, the core essence of how we show up, our authenticity, our humility, whether we can build rapport with another person, is even more important in landing the deal, having the conversation, etc. And that's what's really urging this need for Yoodli.
Right, keeping ourselves still human at the end of it. And what would be the next big thing that you're looking to launch, if you could tell us in like 20 seconds?
Today, we are an AI role-play simulator. Tomorrow, we're hoping to be an experiential learning platform where you come and learn skills in addition to just practicing them.
All right, Varun, we're completely out of time. But thank you so much for joining us on Startup Street. And we wish you all the best on this journey going forward.
Thank you. See you.
See you.
Well, on that note, it's time for us to head into a short break. But coming up, EV manufacturer Ultraviolette bags $45 million in its ongoing Series E funding round. We put the firm's co-founder and CEO Nara and Subramaniam on the hot seat to find out more about Ultraviolette's growth plans. Stay tuned.
26 years of CNBC TV18. "26 years of CNBC TV18.
Well, EV bike maker Ultraviolette has secured $45 million as part of its ongoing Series E round. The latest infusion comes from Zoho Corporation and Lingotto, which is one of Europe's largest investment management companies. Now, the company says this growth capital is going to accelerate the domestic and international scale-up of current products, F77 and X47, and future product platforms, Shockwave and Tesseract. Ultraviolette is now present in 30 cities across India and plans to expand to 100 cities by mid next year. For more on their growth plans ahead, joining me now is Narayan Subramanian, co-founder and CEO of Ultraviolette. Narayan, thanks very much for your time here on CNBC TV18. You know, you've got this $45 million in this ongoing Series E round. One, what does this mean for your valuation? And two, also, when will you close this round at what kind of levels?
Oh, thank you, Ritu. I think while it's great news for us, it's going to, like you mentioned, scale our growth across the current and the future platforms. When it comes to the topic of valuation, see, we've been in this to build compelling products. We've established the motorcycle business in our firm way. We're entering more mass-oriented segments like the scooter and the Shockwave coming up in 2026. and perhaps looking at a IPO scenario in the next 18 to 24 months. And from where we are today, I think that would be the right time to get into details around the valuation. But very good to see continued support in our vision towards building world-class mobility solutions.
Okay, Narayan, you're saying an IPO is what you're considering in the next 18 to 24 months. So could you give us a sense of what kind of milestones you want to achieve before you do that? And the investors that may be seeking exits, I mean, what can you tell us about these plans? I know it's a little early, but what can you tell us?
Of course. So most of our investors, I think all of them, in fact, are in it for the long run. They've been backing the company through multiple phases, right from inception towards the scale that we are at today. And when it comes to working backwards from an IPO, what we believe in is having a very strong, robust business, both in India and overseas markets. And in that regard, we've taken a top-down approach. We started with more performance-oriented segments like the F77 and the X47 that took us about 8 years of R&D. But the advantage that it's built into the brand today is the fact that we vertically integrated all of the core EV subsystems. We make our own battery packs. We make our own BMS modules. We make the vehicle control unit, the charging technology, the controllers, the softwares, all of it. So in essence, what we've built is an organization that is geared up for profitability. And we've taken the approach of building for profitability first and scale second. And today we're at that transition point where the last year plus has seen our growth in the motorcycle space. And starting 2026, we will enter into the mass-oriented segments. So if I was to think back 24 months from a potential IPO scenario, we would like to have an established business across the entire spectrum of two-wheelers operating in a well-oiled, robust way in India. We're already in Europe now. In 2025, June, July, we launched in Europe, and now we're retailing in 10 countries across Europe. And the good news is that the certification for Europe, while it took us a little over a year to get the certification in place, the hardware is the same as what we've launched in India. The vehicle goes out from here with no changes. But the benefit is that with the Europe certification, it opens up 40 countries for us across the world. So we will be looking at strong domestic and international growth, and of course, be close to EBITDA breakeven before we look at an IPO scenario.
All right, that's quite the comprehensive response you've given us there, Narayan. Lots to digest. But a quick word on these launches, and you were talking about the European market. The X47 crossover motorcycle you've launched in India. One, how soon before you ready it for the European markets, and two, the F77 is now in European countries already. Are you looking to ramp up production for both of these? I mean, what's the plan from here on?
Sure. Yes, the F77 launched first in India. Now it is already in Europe.
Yeah.
The platforms are quite common between the two motorcycles. We share the same battery, VCU, and the motor control systems across both of these products. So certification for the X47 for global markets is currently underway. And with the X47 crossover, like the name suggests, it sort of caters to multiple segments of two-wheelers, right from street motorcycles to roadsters, to off-road motorcycles. And the interesting fact is, we're also seeing a lot of electric scooter owners now upgrade to electric motorcycles, right? So now with this in mind, we are seeing vastly increased demand as well across the country.
Yeah.
Let me also tell you that in the last 12 months, we've gone from one city, which was Bengaluru, the home city, to now 35 locations across the country. So we've been having production and distribution scale up with the product portfolio ramping up as well. So yes, we will. The X47 should launch in Europe, I think, before mid-2026.
Okay, so sometime next year you'll have the X47 in Europe as well. A quick word, Narayan, running out of time. Shockwave and Tesseract, what can you tell us about the timeline for these and the kind of product pipeline you have with these platforms?
So Shockwave and Tesseract, highly compelling products. The Shockwave addresses some more of an entry level and a dirt motorcycle market. It's going to be a lot of fun from college students to experienced dirt motorcyclists. Tesseract, of course, is a scooter. We have designed arguably the world's most advanced scooter, comes in with radars, cameras, and a whole host of technology. And not to mention that we are outputting over double or close to 3 times the power output of benchmark scooters in India from an electric scooter market standpoint, and significantly more range as well. We've spoken about range on a single charge going from 160 to 260 kilometers. So we're breaking a lot of barriers in both of these segments. Both of these are also in a very advanced stage of development and testing at our end, and we should be looking at launching them in series sometime through mid-2026.
All right. You're also expanding to 100 Indian cities by mid-next year. I mean, lots of targets you've set for yourself, including EBITDA break-even by next year. You're also aggressively entering Europe. Just tell us how you're going to balance the economics of scaling here in India at the level that you're talking about with the brand-building opportunities in these global premium markets you're eyeing. And outside of Europe, is there any plan at all?
Right. So, like you said, Europe is a motorcycle enthusiast market. If you look at how vehicles have evolved, it's been parts of Japan, parts of Europe and US where motorcycling culture has evolved. So very important market for us, sets the right benchmark for the brand in various parts of the world as well. And the fact that we're now certified in 40 countries opens up markets in Southeast Asia, Latin America and parts of US as well. And these are the markets that we would subsequently be targeting, along with active, aggressive ramp up across India. So we are in 35 locations now. We're targeting expanding to about 100 locations through 2026.
All right. Finally, let me ask you, since you brought up the IPO as well, and you're talking about an EBITDA break-even. Currently, you're at 36 crores in revenues, 116 crores in losses, as per your last reported figures of FY25. How's FY26 shaping up so far? Will you be, break-even by the end of this fiscal, or what can you tell us about the next year or so?
So, see, for us, 2025 was a very, very strong year in terms of building the technology, building scale and distribution. And we talk about losses, but in fact, let me also address that. There's more of expense going back into R&D. It's expense going into international certification, international testing. So it is setting us up for the long run. It is not losses in the typical dictionary meaning of the word losses. It is investment towards the future growth of the company. And through 2026, we're targeting operational break-even, and through 2027 is where we will be looking at EBITDA break-even.
All right, Narayan, we'll leave it at that, and we wish you the best with these plans. It's been a pleasure having you here on Startup Street. Thanks very much for your time.
"26 years of CNBC TV18.